Hi, I'm Jason with Level Up Investing, and in this video, I'm going to talk about the top 6 lessons that I got from the 2020 Annual Shareholders Meeting for Berkshire Hathaway that happened today. So, as a Berkshire Hathaway shareholder, I was planning on attending the Annual Shareholders Meeting in Omaha this year, and then with the coronavirus, the COVID-19 pandemic, and the stay-at-home and everything else, that didn't happen. So it turns out that they presented the shareholders meeting through Yahoo Finance, and Warren Buffett was there. Charlie Munger was not there, but Warren gave a lot of insight into the company and the economy. So I got 6 lessons today, and there's also one bombshell that Warren Buffett laid in the middle of the shareholder meeting, and I'll go over that in a second, and that has to do with the airline stocks investment. So number 6 I got is Warren Buffett saying, never bet against America. And he went into a really nice, I thought a really good history lesson, going back to how old the United States is, being only 231 years old. He made a really funny comment that his combined age with Charlie Munger is 185 years. So when you think about that, the age of this country it's actually quite young. He talks about how much the country has accomplished, and when he talks about the wealth that's been created in the country, that it's basically 5,000 to 1 gain now compared to when this country was first established. So he also mentioned the importance of recognizing that there were a lot of significant bumps in the road in these 231 years. He talked about the Civil War, the Great Depression, World War II, Cuban Missile Crisis, the 2008 financial crisis, and I think he was really saying that just to put the current pandemic and economic halt, really put this into perspective, that a lot of issues have occurred, but the country and the economy has pushed through and gotten past all of them. And he is very optimistic, like he normally is, about how the country is going to do during this current situation that we have. So he always says, bet on America, never bet against America. But he also made the cautionary note that you bet on America, but you have to be very careful about how you bet. And he made a very strong point that you bet on, I guess bet is a bad word, but you invest in companies that you know and that you believe in what they're doing, but you also have to keep an eye out for any major industry changes that can seriously affect the company, affect the industry, and that should justify you relooking at your investments. So again, never bet against America, always bet on America, but be very careful with how you bet. Lesson number 5 that I got was, don't forget our market history. So he talked about the Great Depression, how back in 1929, when the market hit a low, he pointed out that over the course of the following several months, up to a year, up until August, he said August 28th, 1930, that the market actually recovered by about 20% before it made the nosedive into the depression, where the low point went down up to 89% of the market in less than 2 years later. So he did make a point that it did have some market recovery, and I think that's very interesting considering now how our economy looks right now, how some of the stocks have really bumped up relative to the recent low. So he just made it a cautionary point. He said to take a look at the Great Depression, look at the market history, and also keep in mind that today the market is worth, what did he say? He said for every $1 of market value when he finished college, right now that $1 is worth about $100. So this goes back to lesson number 6, where you have to believe in America. He's always been very optimistic about that, but know that there will be these testing periods like the one that we're currently in now. So he also made a point that in 2020 that we are a much better country and much more wealthy than we were back when the Constitution was ratified back in 1789. So he made a lot of historical references during this annual meeting. He says we still have a long way to go, of course, in creating an even wealthier and more equitable society. But the point is that don't forget our market history, don't forget the economic history of the country as we move forward. Lesson number 4 that I got is that cash is still king. So as many of us know, Berkshire Hathaway sits on a whole lot of cash. To be exact, he talked about $125 billion in net cash and US Treasury bills, and not to mention the $180 billion in equities, and he said that those numbers were actually low too. So what he was really getting at, the point he was getting at was that he said you never want to use borrowed money to make investments because you never know what's going to happen. You never know if there's going to be a market crash, if there's going to be a freeze in the banks, if there's a freeze in liquidity, there's going to be a rush to liquidity. You never know if the Fed is going to do something or not do something to help the economy. He talked about different Fed chairmen and how the activity of the Fed has really had a lot to do with who's in charge there. So he gave a very cautionary note, again, very conservative and cautionary. He says that Berkshire Hathaway always keeps plenty of cash in case another 9/11 happens or a pandemic like this occurs, and he doesn't want to depend on anything. And he says that there are times when the money totally stopped, like in 2008, where there were freezes in credit. So that was one of the main points he had. He said you want to be in a position where you can get through anything. And so, I mean, talk about a reserve fund. You know, on a personal level, a lot of us are given the advice, hey, you know what, keep a 3 to 6 month or 12-month rainy day fund, a reserve fund. Well, you know, $125 billion in net cash and treasury bills is quite some fund. But anyway, they want to have that to weather the storm, and also if a good purchase comes around at a really good price, at a really good value, then Berkshire Hathaway wants to be able to go for that if they wanted to, and if the numbers look right. So cash is still king, and he further explained why Berkshire Hathaway sits on so much cash. Lesson number 3 that I got from Warren Buffett was check yourself before investing in stocks. So he made a very clear point that you should not be buying stocks. He said this before. You should not be buying stocks unless you are financially and psychologically, he pointed out, psychologically prepared to own the stock for an extended period of time, even if that stock price drops by 50%. So this goes in line with the section of the annual meeting where he talked about the first quarter review and how the operating earnings were up by $500 million, but the net earnings was at a loss of $49.7 billion due to investment loss. So so quite a big drop. And he made a point that, you know, some people are more subject to fear than others. And I'll quote him on this one. He said, "Fear is something I have never felt financially." So he said you have to be able to understand the company you're investing in, and if you don't, then you're going to be subjected to what someone else says or someone else thinks or does. You have to be very comfortable and, what he says, psychologically prepared to own this part of this company for a long time, regardless of any issues that occur, any down markets, and know that the company will make it through. Lesson number 2 I got from Warren Buffett today was you don't just buy a stock, you buy a part of a business. So he wanted to remind everyone that buying a stock is buying a part of a business. And he used a really good analogy where he said, let's say you bought a farm, and there's a farmer next door who comes up to you every day and says, hey, I want to buy your farm, or hey, I want to sell you my farm. And every day the farmer keeps coming up to you. Well, he says that when you bought your farm, then the key to that was that you were buying the potential for what the farm was going to produce crops, livestock, etc. And even though the person next door is offering you to buy and sell, that person is serving you, but you are not obligated to buy or sell. So he made that good analogy with actual stocks. He says that even though you are seeing news happening with certain companies and you're seeing opinions by the minute, that you absolutely don't have to make decisions on a minute basis. You have to focus on the company that you invested in. And just like owning a farm, you have to focus on the production of that company, the earnings that are going to occur, and that should be your reason to be an owner of that company, and in this case, owner of the stock. And you shouldn't be subjected to the fluctuations of the stock, because you have bought part of the business, not just the stock. So that was a really good lesson that he came up with, and he also says that if you like the business, then unless, and this was the key point, unless the business has fundamentally changed in some way, then you should be able to bet on that business. So he says that we try to buy businesses that we think we understand, in his modest way of saying things. So own the business, own part of the business. You're not just owning a stock. And the number one lesson that I got from Warren Buffett today at the shareholders meeting is that even Warren Buffett makes mistakes. And this was, I thought, the most interesting part of the whole shareholder meeting. So he says that in April, and he normally doesn't talk about things they just did with the company, but in April, this past month, that Warren Buffett and Berkshire Hathaway sold approximately $6.5 billion in equities, but specifically, Berkshire Hathaway has sold the entire stake that they've had in all four major airlines. And this was he really dropped the bomb on that one, because we're talking American Airlines, United, Delta, and Southwest that operate about 80% of commercial flights, as he quoted. He even said, and I quote, "I made a mistake in evaluating." Well, that's what he said. He said that they paid $7 to $8 billion for these equities, and got about $1 billion in earnings in the time of their ownership. He made a good point that these are very well managed companies, very good CEOs, but because of the pandemic, because of the fact that a lot of earnings have been lost, and even when people start flying again, the expectation is that the number of people flying, the earnings from those passengers is not going to cover the fact that they have a bunch of planes that are still sitting on the tarmac, and that there's a whole lot of property and equipment that has to be covered in expenses, and that the earnings are not going to cover them. So because of that, he also stated that he anticipates that each of these companies is probably going to have to borrow $10 to $12 billion each in order to stay solvent, and that's going to come out of future earnings as well. So because the future of the whole airline industry, he stated was very uncertain, then that's why he decided, and they decided at Berkshire Hathaway to exit all of their positions in the airline stocks. He says, we don't trim down. He says, if we buy a company, we buy as much as we can because we like the company. But if we're going to sell the company, we sell it. We sell our shares. So that's what they've just done. And I'm sure if you follow the news over the next few days, you're going to see a ripple effect of this news that he just brought up. And I think it's going to be very interesting for the economy, considering what Berkshire Hathaway has just done. He says, "I wish them well." So he tried to during the talk, he tried to really say how much he felt the companies were good companies, well managed companies, but in a bad situation. And it wasn't until someone on the question and answer period specifically asked, "Have we exited these stocks?" And the answer is yes. Berkshire Hathaway has, and in his very humble way, he called this his mistake, and I like to put quotes on that, that's a mistake, when in fact it was really due to a fundamental change in the industry that no one could foresee. So to his credit, he called it his own mistake and he took responsibility for it. When in fact, personally, I don't think it was his mistake. I think it was just the industry. And when the industry fundamentally has changed because of what's happening with the pandemic, he and Berkshire Hathaway has had to decide what to do about that, and that's what they've done. So that was my number one lesson from him is I don't know if I'd even call it a mistake, but even Warren Buffett makes mistakes. So those are my top 6 lessons I got from the Berkshire Hathaway Annual Shareholders Meeting today. A lot of good information, as you can see. And so if you like the content here, then definitely give me a like on the video, subscribe, and hit the notification bell so you get these videos right away. And I'll be doing future videos on specific companies, their annual reports, and potential investment opportunities. So I hope to see you in the next video.